What's up, Bitcoin Bulletin crew? We're kicking things off with a bombshell from Fidelity, revealing that a staggering 42% of Bitcoin's market supply could become illiquid by 2032. That's right, almost 8.3 million coins potentially locked away, fundamentally altering scarcity and market dynamics as we know it. We're talking about a seismic shift from an age of plenty to an age of profound scarcity, driven by institutional adoption and long-term holders. Next up, prepare to be amazed or perhaps bewildered. A colossal 12-foot golden statue of Donald Trump, complete with a Bitcoin, has been controversially unveiled right outside the U.S. Capitol. This isn't just art. It's a statement, dropped just as the Federal Reserve made a key interest rate cut. Organizers say it's meant to spark debate on digital currency, monetary policy, and the government's financial role. Then, we're jetting over to Japan where Bakkt Holdings has just made a strategic move, acquiring the premium domain www. Bitcoin. Co. JP. This acquisition signals a significant play in the Japanese market, aiming to build solutions for clients to thrive in the growing crypto economy. It's all about establishing a strong digital footprint in a key international territory. And finally, a massive win for accessibility. The SEC has just approved a much faster way for major exchanges like Cboe Global Markets, Nasdaq, and NYSE Group to list exchange-traded products backed by spot commodities like Bitcoin and gold. This means quicker access for investors to these vital assets. Stick around for all the details and what it means for you. Bitcoin's scarcity skyrockets. Fidelity predicts 42% illiquid supply by 2032. Get ready for a seismic shift in Bitcoin's market dynamics as Fidelity Digital Assets forecasts a monumental change by 2032. A staggering 42% of the circulating Bitcoin supply is projected to become illiquid. This means approximately 8.3 million coins could be locked away, untouched for 7 years or more, fundamentally altering the landscape of Bitcoin scarcity and trading. This isn't just a prediction. It's a potential end to the era of plenty, ushering in an age of deep scarcity, driven by both institutional investors and long-term hodlers. The definition of a liquid supply, according to Fidelity, includes Bitcoin held for 7+ years and those owned by public companies holding over 1,000 BTC. These entities are steadily accumulating, with projections suggesting they'll hold over 6 million Bitcoin by the end of 2025 alone. Public companies, in particular, are amassing nearly 1 million BTC, representing about 4.6% of the total supply. This trend is amplified by institutional adoption, with over 100 publicly traded companies now holding significant Bitcoin reserves and a notable 35% surge in corporate purchases in early 2025. Companies like Bitcoin Standard Treasury and Riot Platforms are at the forefront of this corporate treasury movement, adding to the tightening supply. The community is buzzing about this impending scarcity. Analysts see this as a direct catalyst for potential price appreciation, as the fundamental law of supply and demand takes center stage. While Fidelity acknowledges the risks of concentrated ownership, the overwhelming sentiment points towards accumulation, solidifying Bitcoin's narrative as a scarce digital asset. For investors, this evolving environment means potential price volatility and a reevaluation of Bitcoin's position in their portfolios as it solidifies its status as a premier crypto asset. But hold on, the drama doesn't stop there. We've got a golden spectacle unfolding in Washington, D.C. that's turning heads. Trump statue goes for gold outside Capitol, Bitcoin in hand. In a move that's capturing headlines and sparking widespread debate, a massive 12-foot golden statue of former President Donald Trump, boldly holding a Bitcoin, has been erected right outside the U.S. Capitol building. This eye-catching installation arrived just as the Federal Reserve announced a significant 25 basis point interest rate cut, adding a layer of political and economic commentary to the spectacle. Funded by cryptocurrency investors, the organizers stated the statue aims to provoke crucial discussions about the future of digital currencies, monetary policy, and the government's intricate role in financial markets. The statue has become an instant symbol, with social media alight with visuals and discussions praising Trump's perceived pro-cryptocurrency stance. This bold display coincides with the Fed's decision to lower its key interest rate for the first time since December 2024, bringing it down to approximately 4.1%. While the Fed signaled potential for 2 more cuts this year, their cautious approach for 2026 may leave some investors wanting more. All eyes are now on Trump's reaction to this monetary policy shift, especially given his often critical relationship with Fed Chair Jerome Powell. The public reaction is a mix of awe and bewilderment, with many seeing it as a provocative statement on the intersection of politics, finance, and emerging technologies. Crypto enthusiasts are hailing it as a tribute, while others question its appropriateness and intent. Regardless, the statue has undeniably thrust Bitcoin and its growing influence into the heart of political discourse. From monumental statues to strategic digital real estate, we're heading to Japan for Bakkt's latest acquisition. Bakkt stakes claim in Japan with Bitcoin COJP domain acquisition. Bakkt Holdings is making a significant move into the Japanese market, announcing the acquisition of the premium web domain www.bitcoin.co.jp. This strategic acquisition signals Bakkt's commitment to expanding its presence and offering its crypto economy solutions to a key international audience. The company views this domain as the premier suffix for Japan, akin to the importance of .com globally. Founded in 2018, Bakkt focuses on building solutions that empower clients to grow within the crypto economy through institutional-grade trading and on-ramp capabilities. This latest move is a clear indicator of their long-term strategy to establish a strong foothold in one of the world's major economies. By securing this prime digital real estate, Bakkt is positioning itself to capture a significant share of the growing Japanese crypto market. Industry observers and the crypto community are viewing this acquisition positively, seeing it as a smart move to bolster Bakkt's brand recognition and accessibility in Japan. It's a clear signal that major players are serious about global expansion and are investing heavily in foundational digital assets like premium domain names to facilitate that growth. And speaking of making things easier for crypto, the SEC just dropped some major news on exchange-traded products. SEC greenlights faster ETP listings for Bitcoin and gold. In a move set to revolutionize access to digital assets, the U.S. Securities and Exchange Commission has approved a faster listing process for exchange-traded products, ETPs, backed by spot commodities like Bitcoin and gold. This significant decision grants Cboe Global Markets, Nasdaq, and NYSE Group the authority to list commodity-based trust shares more rapidly, provided they meet established generic listing standards. This streamlines the path for investors seeking exposure to these highly sought-after assets. This regulatory approval is a major step forward, simplifying the gateway for traditional financial markets to integrate and offer products tied to tangible and digital commodities. Previously, the listing process could be lengthy and complex, potentially delaying investor access to market-moving opportunities. By accelerating this procedure, the SEC is fostering a more dynamic and responsive market environment for both Bitcoin and gold ETPs. The financial world is abuzz with this development. Analysts are highlighting the potential for increased institutional and retail investment in Bitcoin and gold through these more accessible ETPs. This decision is expected to reduce friction in the market, potentially leading to greater liquidity and more efficient price discovery for these key commodities. That's all the breaking news for today, but don't go anywhere. We've got a lightning-fast recap and your full call to action coming right up. And that's a wrap on today's Bitcoin Bulletin. We saw Fidelity predict a massive 42% of Bitcoin's supply will be illiquid by 2032. Donald Trump's golden Bitcoin statue appeared at the U.S. Capitol. Bakkt acquired the prime Bitcoin COJP domain, and the SEC approved faster ETP listings for Bitcoin and gold. Don't miss out on any of the action. Smash that like button, subscribe to Bitcoin Bulletin, ring the notification bell, drop a comment below with your thoughts, and follow us on all our social channels for more updates.